Hello, Wolfpack. We're going to be looking into today three distinctive ways to time the market cycle peak, the bull market peak, whatever you want to say. My price prediction, on Bitcoin is not relevant in this video. So if you don't agree with that price prediction, you don't have to. It's not relevant. But I will just say before we get into it that my price prediction on Bitcoin is 113K by December 27th. The way I came to that prediction is by looking at the last cycles, extrapolating the data, and minusing 54% of the returns from all-time highs, and adding 14 days each cycle to kind of take into account diminishing returns and lengthening cycles at the same time. And that's how I came to that price prediction. But I want to speak about three distinctive ways. And the first way to time the market cycle peak is looking at the macro scale, looking at the cyclical theory, right? Obviously, and this goes without saying before I get into the first point, that the most obvious way to time the market cycle peak would be looking at the technical indicators on the 4-hourly chart or a daily chart or something like that, right? The problem with that is in a bull market, in peak bull market, which is October, November, December, January, right? Technical indicators kind of go out the window at a certain point. Corrections that seem to, would seem to be, almost certain to happen in a normal market, don't actually happen. If you look at 2013, for example, look, we just went straight up, 777% in 3 months. It was pretty obvious, if you looked at the smaller time frames at that point, that everything was overvalued and we probably looked like we needed to correct all the way down from 200 USD, but regardless of that, we still pumped to 1,200 USD, right? There's going to come a point in the market, and it's already kind of happening, where everything just looks so overvalued that short-term technical indicators stop mattering. And that's why my first point is look at the macro scale, because the reason why the macro scale works is not because there's something in Bitcoin code, Bitcoin, fundamentals that says Bitcoin needs to top out every 4 years in December, but because enough people believe that it's going to top out in December, and there's enough crypto YouTubers like myself spreading the information that it's going to top out in December, that we kind of think it into existence, right? When December hits, people get ready to sell. And if they see even a slight correction, they sell, and then it plays out, right? So it's actually a pattern, a psychological pattern playing out over and over and over again. Because the 4-year cycle theory is based on the halving, but other than that, there's nothing actually to it, right? It's all just psychology. It's all just we've convinced ourselves that every Q4 we're going to pump and it's going to top out in December, and because enough people believe that, it actually materializes, right? And that's why I think that's more, you should have more faith in cyclical theory than you should have in any other theory in the crypto market, because there's nothing more strong, there's nothing stronger than what humans think, right? Human psychology, and I think that 99% of people, at least 90% of people who look at any kind of charts whatsoever, would agree that Q4s in bull cycles are typically bullish, and would agree with the 4-year cycle. The 4-year cycle theory is probably the most known theory in the entire cryptocurrency market. So it would be very, very, very surprising to see anything other than the 4-year cycle theory happening, right? And obviously that 4-year cycle theory is lengthening, and we are diminishing returns. Obviously, the bigger the crypto market gets, the harder it is to move it upwards, and the bigger it gets, also the longer the moves take. So lengthening cycles and diminishing returns are happening, but even with that taken into account, we should be topping out in December in this bull market on Bitcoin, and altcoins should be topping out in January, right? So that's one way to look at it. That's one way to time the peak. When we enter December, right? When we get close to that December 27th date, start taking profits, right? That's one way you could you could time the top of the market. Start taking profits before we actually hit the top itself, because tops are very hard to identify, because you can imagine the volatility when we hit 100k Bitcoin, right? You can imagine, think about 100k Bitcoin, a 30% correction, which is a normal market correction in crypto, would take us down to 70k, right? We drop 30k on a healthy correction. So it's going to be getting pretty intense when we get higher to that price point. So take profits early. Look at the cyclical theory. Look how far along in the cycle we are, and definitely as we near late December, you'd probably be looking to take profits, even if you don't think the market cycle peak is coming. Because the point is, it's going to be near impossible to time the market cycle peak based off technical indicators. So there's no point thinking, oh, well, if we've got a bullish MACD crossing coming, maybe we'll pump it up to 10K. That's not really how it's going to work, right? People are going to go off what's happened historically. And as I said, historically, we've topped in December on Bitcoin. So that's one way to time it. And then obviously using that data, you can say, well, we usually pump for an extra month on altcoins. So you could say, well, in Bitcoin, I'm going to take profits in, early to mid-September, and then in altcoins, I'm going to take profits a few weeks after Bitcoin tops out. And you could take profits in tranches, right? Every time your investment doubles, take out half. That's one strategy you can do. Something like that, 25% profits each week, take them out, because at the end of the day, guys, the whole goal is not to get caught in the 30% dump that's going to happen overnight when the bull market ends, right? And think about cryptocurrency exchanges, right? When the market tops out, do you really think you're going to be able to log onto your exchange and sell? No, they're going to be down for like 12 hours, right? You're just going to have to sit there and watch your money go down. So it's very important to take profits before it tops. Don't time the top. Take profits before it tops in a bull market. The second way to time the top in a bull market is the Bitcoin dominance chart. This is slightly less reliable than the cyclical theory, but it is still very reliable nevertheless, and I'm still looking at this chart on a daily basis to keep up to date with it. Now, what we can expect and what happened in the last bull market is we had a gradual drop down throughout the entire duration of the bull market in Q4, and this is what happens in every cycle. Q4, we pumped up, right? This is 2017 altcoin season. Bull market, and then we had the altcoin season where we dropped down massively. So we pumped up in Q4. As we are seeing right now, we're doing the exact same thing. We're about to pump up in Q4, and the reason for the pump in Q4 is the fact that Bitcoin takes control of the market. People are FOMOing into Bitcoin on a mass scale, and they're leaving altcoins behind, and hence the Bitcoin dominance chart has to go up. So we would expect it to go up to a certain extent until Bitcoin tops out in December. Whether we top out in this red square here between 52% and 49%, or up here in this higher red square between 57% and 60%, is a question we need to answer closer to that date. It's kind of hard to get a solid answer on that. I would say it's more likely we top out higher, right, when we see that parabolic phase, and we haven't actually seen the parabolic phase, right, on Bitcoin. When we do see that, and that's probably going to happen in November, right, where we see Bitcoin literally just go up 10% per day, on a daily basis in November, that's when we're going to see the Bitcoin dominance chart start taking some massive swings to the upside, and that's when we're going to see this fractal that I've taken from this region play out. But obviously when Bitcoin tops out, which we're expecting in December, we're going to see that money flow down the cyclical chain into altcoins, and hence we'll probably be seeing a massive drop on the Bitcoin dominance chart below, and this is what I want to kind of say, and this is how I'm taking profits here, below the last all-time low, right? In 2018 January, which is when altcoins topped out, we hit an all-time low on the Bitcoin dominance chart of 35%. Generally, this chart is in a downtrend, and as well as the fact that there are more altcoins in the market, more money to be spread into more places, we can assume very confidently, actually, it's not really an assumption, it's just kind of a fact, that if we do see an altcoin season on a similar scale, which it is proven that will happen because we've had one at the start of the year, right? If we can drop on a similar scale, we will be dropping below the 35% all-time low into a new low. I'm expecting that to be between 30 and 20%. So how would I be taking profits based off this chart? Well, one way you could do it is wait for a drop below 35% Bitcoin dominance, and then start selling your altcoins like, 5% of your altcoin holdings per percent the Bitcoin dominance chart drops down. There's multiple different ways to do it, but the point is, once we get below this all-time low, you should be getting more and more cautious as we go lower, because that's the last real technical indicator we have, of support. So from that point downwards, it's kind of just price discovery to the downside. So every percent below 35% we go, you're taking a higher and higher risk. So start selling at that point. That's another thing you can do. Right? That's the second point. That's the Bitcoin dominance chart. And then the third thing, and this is a lesser known thing. This is a website, right? It's called the CBBI, and what that means is essentially it's the Bitcoin Bull Run Index, right? The Bitcoin Bull Run Index by Colin Talks Crypto, right? And it's a very abstract thing to bring up in this video, but the reason why I like it, right? And the reason why I like it, I've been looking at this quite extensively in the last couple of months. This indicator, or whatever you want to call it, right? The CBBI historical chart has called both the market cycle tops in 2013 and 2017, right? Whenever it's at 100% confidence, the market cycle top is called. We called both of those successfully to the day, and we also called the market cycle bottom successfully to the day, right? When it's below around 3 here. So you can see when it's 3, we called the bottom here in 2011. It was 2 here, we called the bottom in 2015, and it was 2 here in 2018. So, you know, the general idea of this model is that when the CBBI confidence is at 100, that is the market cycle peak, and when it's at 1, that is the bottom of the bear market. Now, we got very close to 1. We got to 2 here, we got to 2 here, we got to 3 here, and then on both of the bull markets, we've got to 100. Right now, we're currently at around 62, and you might be wondering, how does this come to this calculation? Well, we've got all of these indicators here that it uses to come to the calculation of what the confidence level is. So when this nears 100, and I will be looking at this closely because it's not just a random chart, right? This is based off all of these indicators. It's based off halving to peak days, pi cycle top indicator. It's based off Google search history on the word Bitcoin, reserve risk. It's based off a bunch of things that are actually very commonly used in terms of determining the top. It's basically taken 12 very commonly used top identifiers and establish it into one chart. And so when that nears 100, as I said, we're currently at 62. That's probably an indicator that will probably be nearing the top there. If you look at previous cycles, as I said, we're at 62 right now, and you look at the date on previous cycles. In October, in 2017, we were up 69, and in October, we'll check here, in 2013, we were at 60. We're currently at 62, so it seems to be tracking quite nicely. It seems to be playing out. So as that nears 100, you'll probably be taking profits on Bitcoin as well. So those are the three things. We've got the cyclical theory, and the macro scale, and we've got the Bitcoin dominance chart, and we've got the CBBI. Those are the three things I'm going to be looking at for the most part, as to whether it's time to sell towards the end of the year, towards January, and take profits on your coins, not only on your Bitcoin but on your altcoins as well. Obviously, there's a few more indicators you can use, a few more charts you can use, like the total crypto market cap, total altcoin market cap. But these are the three main ones that I'm going to be looking at very closely in the next few months. All right, guys, thanks for watching. Hope you learned something from this video, and I'll catch you guys in the next one.